Hello and welcome to CryptoWeeklies. Today we'll discuss about Solana and its AI-based forecast as well as DCing Solana. Before we do that, we'll briefly look at some of the narratives of the last 24 hours. There are a mix of bullish and bearish narratives. A quantum proof security, a bullish narrative. Elon Musk claiming AI gains traction fast is a bullish narrative. Shiba and Japanese exchange to acquire FTX Japan and 2.3 trillion worth of Shiba Inu in 24 hours. And there is a dump in the crypto market which is bearish. Then uh, related to real world asset, there is a news saying that they are tokenized nonsense. APAC crypto crime spikes, which is a bearish thing for crypto. Uh, EZA announcing 1 million in development is a bullish narrative. uh, Talking about Bitcoin and how the importance of it being a hedge against being programmed. Also, Shiba Inu skyrocketing in net flows is a bullish narrative. Looking at the last 2-3 days worth of peak value, this is our composite risk score between 0 and 1, where the low risk uh, territory between 0 and 0.2 is a good time to DCA. The yellow zone is a neutral zone. Right now we are really close to this 0.2 level. This is analysis of top 100 cryptos by market cap and their risk levels based on price, volatility, alpha, beta, risk adjusted return and percent drawdown. Today on June 20th of 2024, we have data for about June 19th. The risk levels are slightly above 0.2. Let's see if in the coming week, if the color code goes back to green. The key idea is when the color code is dark red, that's when DCing out based on the risk. Overall market risk is a good idea. Again, none of content is financial advice. This is just historical data as an input. In terms of Solana, its presence on this narrative word cloud, this is all of the narratives on discussed related to crypto on YouTube and X, and based on the frequency, the size on this word cloud is determined. Bitcoin and Ethereum are the top narratives. Over here are Cardano, XRP, some of the other altcoins, meme coins. The overall bullish sentiment is now a smaller narrative than the bearishness. That means bearishness has taken more lead than bullishness. In terms of popularity, Solana is also one of the popular narratives. Altcoins are being discussed, but again, uh, the key idea over here is the bullishness is kind of diminished compared to the bearishness. So in terms of the last 24 hours, which cryptos have done really well, Near, Injective, and Graph have done well. Maker, XRP, and ETH have a decent last 7 days performance. Or the last 30 days, XMR, TONCoin, and Kaspa are doing real good, and TONCoin and XMR are decent over the last 90 days. This is percent change in performance. In terms of looking at the 7 gems in the crypto market, Solana is one of them. In the middle, this is based on the total return and volatility. Solana has provided, and since this January 2023, Solana's return has been about 13x. Sharpe ratio at around 16, kind of between 15 and 20, this level. You can see of the 7 gems, Solana is one of the. So if you cluster Maker and Bitcoin together, which have lower volatility and lower return, and Injective, Render, and Solana together, Solana has less volatility and much less volatility and slightly low return. That's why the Sharpe ratio is at around 16, whereas Injective and Render have a slightly higher Sharpe ratio, but the volatility is almost 95% to 102%, whereas Solana has about 80% volatility. So let's go back to analyzing the risk over the last key periods. This is Bitcoin and Ether, but if you focus only on these two, they have about market cap of about 8, or market dominance about between 60 and 80%. Right now we can see that this is the difference between price of Bitcoin and Ether with respect to its 20-week moving average. We can see that Bitcoin is in the low risk regimen. The risk level normalized between 0 and 1 is less than 0.4. Ether is at around 0.47. You can see that when the risks are less than 0.4, that's when the band associated with it is low risk. And historically speaking, dollar cost averaging during low and lowest risk has been beneficial compared to some of the times when the simple moving average is too far, the price has gone too far away from the simple moving average to the upside. So now looking at Solana's forecast, this is the AI based forecast, the model we trained in June of 2024 with price action starting April 2020 when the token started. The token was launched. Right now the price of Sol is at around $135 over here. You can see right now market cap at around $60 billion, total volume at over the last 24 hours at around 2.3 billion. When we had trained the model, the price of Sol was at around $168. Per the base case scenario for Solana, it was at the price action between $170 and $220 was the base case between now and November. But you can see that now that we are in the week of June 23rd of ending June 23rd of 2024, the bear case is at around $127. The price is very above this bear case but below the base case. So if the bear case were to pan out, the theoretical floor one standard deviation confidence or 70% confidence level, the price action could be at between $90 and $138. That's the bear case for Sol. The bull case for Sol is if the market were to come back and rally, the price could be between $190 all the way to about $450. So this is the bull case in terms of discerning whether Sol is overvalued or undervalued with respect to its price. Slightly overvalued. Historically speaking, this is the MVRV-Z based analysis based on regression model. The price is close to the between the 2 standard deviation and 3 standard deviation bottom. That means that unless the market structure changes, this in an upswing, this is a good time to allocate. This is again not financial advice. In terms of today's analysis, which is the risk color and dollar cost averaging based models, the first one based on simple moving average, the second one based on linear regression. Starting with the simple moving average, Solana's price color coded with on in terms of the risk levels between 0 and 1 based on its distance between simple moving average, 20-week moving average. This is the description. So negative distance means so if the price is lower than 20-week moving average, the color codes become more and more purple, and this sky blue, darker version of sky blue. So in this case, right now, if you zoom on Solana's price action, the risk level is at around 0.3. That means it's in this third band between risk level 0.2 and 0.3, the third based time to dollar cost average per hour analysis. In terms of the DCA or the logarithmic regression analysis based bands, you can see over here the regression band is at around the fair value regression band at around $84. Solana's price at around $135, the risk level at around 0.41. So for this analysis, this is the fourth or fifth best time to DCA. You can see the risk levels is in between 0.3 and 0.4, the fourth band. And in terms of concluding the video, based on the DCA analysis, Solana at this point is not in its lowest risk territory, also based on the SMA analysis or the regression analysis as well, unless the market has a phenomenal upswing in the coming days. This is again and also with respect to the market value, realized value, Z-score based model, Sol is slightly overvalued. But if you are looking at the AI based forecast, the price action between now and November, if you believe in the bull case for Sol, could be between $190 and $450. With this, I will conclude the video and hope you enjoyed this video. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.